Hello guys, in today's video we're going to be looking at VAT. VAT stands for Value Added Services. So it's basically, okay, let me just move on to the next slide. So what is VAT? VAT is a tax that is levied on taxable supplies of goods or services by the vendor. So when it comes to VAT, we normally use the word vendor instead of a company. So basically what happens is, let's say you are selling something, you're a company, obviously you'll be selling something. So on every sale that you make, there's a portion that you need to add on top of it, and then you pay that amount over to SARS. So let's say for instance you are selling cars, and then on this particular instance your car was 100,000, right? And you are registered for VAT, and you what you then need to do, you need to register for VAT, and then on the 100,000 you need to add 15%, and then that 15% you'll then pay it over to SARS. That is why my definition says it's a tax that is levied on taxable supply of goods or services by the vendor. So if you're selling your car for 100,000, you add 15%, then you end up selling your car for 115,000. But the 15,000 is the one that you're gonna pay it over to SARS. I hope it's clear. So if you do not understand, just let me know. Every company, well, most companies, they have to register for VAT, and then there's a portion of their sales that they need to take and then pay it over to SARS. Let's just move on to the next slide. So who is required to pay VAT? There's three categories of people that are required by law to pay VAT. The first one is a vendor or a company whose taxable supply that have exceeded 1 million in the previous year. So for instance, if for instance you are making sales and your sales are now over 1 million, you are required by law to register for VAT. And it's important to remember that this is based on your revenue, not on your net profit. So, based on my example before, so let's say you are selling cars and each car is 100,000 and you have sold 10 of those. Already you are on million and you are required to register for VAT. So, it's important to remember that this is based on your sale, not on your net profit. So let's say, for instance, you are the one who are selling cars and all that, but you have other costs that you have incurred. Let's say maybe you've got your salespeople, your marketing costs, trying to market your car. All those costs, you do not take them into account when you are required to register for VAT. So let's say, for instance, this car also that you sold for 100,000, you actually bought it for, let's say, 40,000, but it was smashed, it was coming out of the accident, and then you had to repair and fix it and so on. And then you find out that, okay, you paid an extra 20 or 25,000 on it, and then so the cost is now sitting on 65,000, but you sold it for 100,000. SARS does not is not going to take into account that you have had some cost and so on. They just look at your actual revenue, your sales, to say, okay, you made sales of so much, then you are required by law. So it's based on your revenue, not on your net profit. So in other words, you do not minus the cost that you have incurred to say, okay, actually, this car, though I sold it for 100,000, I had some other costs that I've incurred. So then I made a profit of about 20,000 on it. No, they don't look at it like that. It's not based on your net profit. It's based on your actual sales before you minus your cost. And then the second one is a vendor who has a contractual commitment to make testable supplies exceeding 1 million. So a good example of these ones, it's guys that have got tenders. Let's say, for instance, you've just been awarded this nice, lovely tender for whatever, 100 million. You haven't really made any sales. You are required by law to go and register for VAT, because now you have a contractual commitment that says, okay, your tender says you're going to be awarded a tender of 100 million. So you have to go and register for VAT. But even if you are not a tender person, let's say for instance you are just a normal company and you have nice good clients, and then you've signed up a 3-year contract with them that says, okay, you're gonna be supplying us this kind of products for 3 years, and when you look at the contract it's above 1 million, then you are required to register for VAT as well. And then another one, the last one, is a vendor can also register voluntarily if they have taxable supply that have exceeded 50,000. So let's say, for instance, okay, you don't meet any of the two categories above. You then, but you voluntarily want to go and register for VAT. Then the law says, okay, but you must have at least 50,000 of your sales. Then you can voluntarily register for VAT. So yeah, please let me know if you're not clear on this, and then just drop your questions and then I will explain it to you further. But this is just the purpose of this video was to just give you guys an overview of VAT so that you have this broader picture of how VAT works on the next following weeks, and then I'm gonna be diving deep into VAT and yeah, giving you more practical example of how VAT works. But now at the moment, I just wanted you to have this overview of how it works. The bottom line is you have to have sales of 1 million. If your sales are below 1 million, you are not required to register for VAT. The only condition is, but if you voluntarily want to, then it's 50,000. And again, okay, this was just an example here. And what is the rate at which VAT is levied? VAT is levied at 15%. It's also levied at 0%. So if you look at my example here, so this company, it means it was registered and they are levying VAT at 15% because 15% of 100,000 is 15,000. But there are some items, in other words, there are some products that you levy VAT at 0%. So you still levy VAT, but it's 0%. Going back to my example, let's say for instance, it was one of those items where VAT is levied at 0%. So here in this case, there would be no VAT because it's 50, it's 0%. So if you take 100,000 times zero, you would get zero. So there's no VAT, so you'll just sell your car for 100,000. But in most cases, cars are rated at 15%. So I was just making an example that there are some items that are levied at 0%. And then also there are some items that are exempt from VAT. Those items obviously they are exempt from VAT, so there would be no VAT again. They work almost the same. The outcome would be the same as zero rated, but it's different. And it's important to know that they are exempt because there's a lot of the treatment is quite different. So you just need to know this as it is that okay, some items are levied at 15%, some items are levied at 0%, but some are exempt. And you need to know those items that are exempt and those ones that are levied at 0%. Like fuel, for instance, fuel is levied at 0%. So that doesn't mean that VAT is not levied. VAT is levied, but at 0%. So just keep that in mind that it's levied, but it's levied at 0%. So the that supply is vetable, but the rate is 15. It's 0%. I think the idea also is trying to keep VAT at, to keep fuel low, but also you are already paying some levies on fuel, so it would be like they're taxing you twice anyway. So I think that's why it's sitting at zero. I'm not sure the reasons behind it, but it's levied at 0%. And then there are some items that are exempt. Mostly it's essential products, maybe like your brown bread. You'll notice that your brown bread it's cheaper than your white bread because they take your brown bread as though it's essential. So they're basically trying to keep the price low. So there are some items that are exempt. I'm not sure if it's eggs as well. I'll check the list of exempt supplies. But mostly some of the essential food items they're exempt, or some would be levied at 0%. Okay, the next one is when is VAT levied? So when is VAT paid? So the way it works is VAT is paid according to categories. So when you register for VAT, the commissioner will tell you which category you fall in. There's category A, B, C, D, E, F, right? I'm going to show you in the next examples how these categories work. Let's say, for instance, when you go and you you went and you registered for VAT, and then the commissioner tells you that okay, you fall under category A. So that means that you will pay your VAT after every 2 months. So what that means is at the end of January, you will pay your VAT, but because it's 2 months, it would include December. So it's going to be December and January. And then again, end of March, you would have March, you'd have Feb and March, right? End of May, you would have April and May. End of July, you'd have June and July. So that's after every 2 months. Category B works a similar way as category A. It's after every 2 months. It's just that the months are different. So if you look at category A, it's January, March, May, July, September, and November. But here in category B, it's Feb, April, June, August, October, and December. So again here, your February would have January and Feb. Then you submit. Those are the 2 months that you submit. April would have March and April. June would have May and June. August would have July, August. October would have September, October, and December would have November and December. That's category B. Category C, you submit every month. So normally these are big companies because they submit every month. I mean, you don't want to wait for 2 months to submit your VAT for a big company. Firstly, it's going to be too expensive, the VAT that you'll be paying, and it's going to be too much work because it's a big company, they've got high volume transactions. So rather start saying, okay, rather you would fall in this category and then you would submit your your returns after every month. I don't know if it's only big companies, but what I know for sure that I've seen in my experience is that big companies pay VAT after every month. I think it's because they are large and they it's going to be too much. It's going to be a lot of money that you'll have to pay after every 2 months. So rather pay it after every month. Category D, I've never seen companies on category D, but it's there on the law. So it's after every 6 months. And category E, I've also never seen them. It's after every 12 months. Category F also, I've never seen them. The period again, it's determined by the commissioner. So I want to go back to these periods. So this one you submit it after every 2 months, right? But obviously at the end of January, you can't say, okay, today is the 30th of January, now I'm submitting today. There would be some entries that you wouldn't have captured. There would be some payments that would have been made that will clear tomorrow. There's a whole lot of things. So what then the commissioner does, saying, okay, for your January stuff, you have to complete it by the end of Feb. So by the 28th of Feb, you should have submitted. All the transactions should have cleared. Every transaction should have been captured, and then you submit. So January is due end of Feb. March is due end of April. So March you would include no, yeah, you would include Feb and March, but you are not really required to submit at the end of March as such. You have that allowance to say, okay, during April I'll work out and then finish up all my transaction capturing and everything and then submit. So basically you have a whole month to submit the previous month's return. So it works the same way for each of these periods. So Feb, for instance, it's due end of March. April is due end of May. June is due end of July, and so on. It's the same with every month. I mean, January is due end of Feb, and then Feb is due end of March, and so on. Just give me a shout if you guys are not clear on this. Yeah, that's it. Okay, yeah, that's about it, guys. So yeah, if you have any question, just give me a shout. Um, but I will dive into this and then so that you'll understand. The purpose of this video was just to give you an overview of how VAT works, and then then we'll then start to dive in. For now, I think this will give you a very good solid boy background, and you'll be able to understand your tutorial letters better. I know obviously I haven't really gone into examples and giving you more examples, but this should give you a bigger picture of how VAT works. Thank you very much.